Hello there. Today we're going to be looking at ICT strategy. Okay. Now you see that we are looking at Euro JPY. Okay. You see that we've been turning up massively, and here we got this. We are getting some slowing down. Okay. Now the thing with ICT is we're looking at the liquidity being taken out. Okay. Fair value gap on the block, and technically we don't need to look at the bias, so we don't need to know bias in pretty much. We just need to look at liquidity, and that's it, and so on and so forth. Okay, now what I'm going to do, I'm going to delete this. Alright, here we go. And we're going to be looking at the recent swing high and recent swing low to see where we are. So this is the current high of the market, and this is going to be the current low here. Okay, now again, we're going to be trading. Let's go for 1 hour. We're going to be trading London session and the New York session as well to see whether we can get into some trades. So we're going to be looking at 8 o'clock. Okay, so again, my time is set to UK time, so 8 o'clock, and then 2:30 will be somewhere here. Okay, now let's go in the 15-minute time frame and see what we have. Again, I'm gonna go and do this group play function to this side to see what we have. Okay, now nearly 2 o'clock, we have the high in this particular case. So this will be the high of the Asian session. Again, if you're not sure about the market session, you can find an indicator for this. So if you go to indicator, it's a market session. Okay, to know it's session or even Asian session if you want. Okay, Asian range. If you know the timing, you can use this. Okay, so this is the timing of the Asian session. Okay, now let's take a look. What else do we have? So this low is London low or New York low, and then let's take a look during this session here. Okay, 5 and so near open. Okay, so we've got the low here. Let's say this is the low in this particular case, and then we start to get in London opening over there. Okay, all right. Now during this time, market has been trending. Okay, and then before London open, we want to take our liquidity below the Asian session. Okay, let's take a look. All right, so we want to take it below the Asian session, also below the London session previously, but we're still looking here. Okay, so that's 7 o'clock London open. Now if we were to look at the all-time thing, you see that we are, so what are we doing? So we are going sideways pretty much. So see the market is here, down, up, down in this particular case, and then we come up here, we got rejected. Okay, so people can say we are going to go in the downtrend, but we don't need bias at all. Okay, we don't need the bias at all. We don't need the bias at all. Okay, so I'm going to zoom in. Minute time frame. Okay, now what we're going to be looking for is we are going to be looking for a change in the market shift. Okay, so a market shift from us. So for that, I'm going to go on the 5-minute time frame. Again, you can go all the way to the 1-minute time frame. Let's go to the minute time frame here and see what happens. Okay, so we're looking for. So we know that the market was taking down liquidity. Okay, so all this liquidity has been taken out. We need to go up. So we're looking for our bias in this case is going to be an uptrend. Again, an uptrend. I'll show you why this worked and why it did not work, or why it's not an idle trade later on, and so on. Okay, now, so we are here so far. So 8 o'clock. Okay, as you can see, we are forming lower lows. Now let's keep going. Okay, as you can see, we've broken structure again. So broke structure here. Okay, so broke structure here. And broke structure again here as well. Let's keep going. Okay, let's take a look what we have. So now here you can see that we have a change. broken character. Alright, but this was unbroken. Now here we have a break of this. Oops. We have a break of this. And we also, oops, here we go. And we also have a break of this. So this one is the change and followed by 2 break of structure. Okay, now here we have a change, but there was no break of structure, as you can clearly see. And what we have is we have a fair value gap left behind, so, and then we've got and the candle that creates this is here. So this is our order block on this side. So market came in, tap into this. So ideally, we're going to place our here, stop here, and we're going to go for a 1-to-2 residual ratio in this particular case. Okay, and let's take a look what we got. And there we go. We have achieved our target. Okay, so you can clearly see we hit the target in this particular case. Now you see that we came up to this point, and then we have a rejection. So this is an order block over there. Okay, now this change could actually be an inducement. It could be a grab of liquidity in this particular case, and then market went down. So the market went up, took liquidity, and then break structure. So we are indeed bearish, as you can clearly see. Okay, now in terms of target wise, so 1-to-2 works. If you are waiting for confirmation, then you're going to be placing it here. Okay, so this entry at the close of this hammer candle, and your stop. Now you need to be careful with the stop. Your stop could be above this hammer candle here, or if you want to be careful, underneath this one here. Now the problem with this one is it decreases your risk to reward ratio. So what you want to do is you want to enter it here, or pretty much at this fair value gap over there, and then 1-to-2 is enough. Okay, so 1-to-2, that is enough. Okay, now what we can do is we can look for more trades. Now we're here. You can also, again, so we're here. Now the thing is, in this video we're going to only be trading ICT setup. Okay, and our bias that we made so far, that we're taking liquidity down, we are only looking for bullish action. Okay, now let's keep going. So this is London session. As you can see that we are currently 10 o'clock, 10:15 in the London session. So you've entered pretty much on this candle here. 10 o'clock you've entered, and then you've entered 10 o'clock, and then you are out 10, 12, 10 minutes. That's it. Profit. Okay, now let's keep going. Okay, so we came back down into this order block, and you see that we failed to displace even higher. So we failed to take even higher in this particular case, and then we broke structure. So we took this out. Okay, now let's take a look what's going to happen here. Okay, so we came up, take liquidity here. Now we're going to be pushing higher, and okay, and then we want to see this breaking out. Let's see what happened. Ooh, so instead we failed to do that. So we went down, went down instead. So you clearly see we went down instead. So we have this, some sort of our order block over there. So we got the break of structure here. Okay, pull up, break down, close above, break down. So this one here maybe, but we'll see. Okay, so it went down again, Alright, let's keep going. So now we are getting close to the New York opening. Okay, New York open. Now what you can do is you can, okay, if there's opportunity to the London session, you can just do that and then go away, and then maybe later on come back. Okay, come back. Alright, now if I go here, you see that market come back here, Then we have, what do we have? We have a fair value gap here. Now people would be doing, what would people be doing? Looking to enter here, isn't it? Enter here and aim for 1 to 2 again. 1 to 2 somewhere here. Okay. Now the problem here is we don't have any confirmation going on. Yes, we have not taken this low yet. Okay, but ideally you want it to come back up and start going up. So you want to do something like this. Go up, come back into this place, come back, and so on and so forth. So we want to see shift to the upside, which we don't have. So that's why you take this trade here. Okay, now let's take a look where we are. Okay, so we've took this out. Okay. Okay, so look at that. So we've got tap into the order block here, and then we have a massive rejection. Okay. Right. So it looks like we have one here. We have one here, isn't it? We have something here. So this is a nice one. Now let's take a look. So we have a break of structure here. Change of character. Okay, followed by a so this candle here by break of structure. So this one, I'm looking for this one. So came back up, down here. So change, and then we left a nice fair value gap here, as you can clearly see. And then we have, so the push that break this was this one here, so nice order block. Okay, and then I'm gonna go for entry here. Stop will be below this. I'm looking for 1 to 2. 1 to 2. Here you go. 1 to 2. Let's keep it safe. 1 to 2. Come back. Here we go up. Okay. Now, if you want to be safe, then you want to see this candle, and we see another candle, and then you'll be like, okay, so we have this candle here. Then your stop will be here. Now you see the problem with this one is the stops. Now the good thing is we've left behind fair value gaps. This one and this one. So therefore we can go and tap into this one. Now to be safe, I'm going to go 1 to 2. Okay, because I'm not sure which of these two fair value gap markets going to tap into. And you see the market went all the way up. So this week is take out the liquidity and tap into the order block, and then we have a massive sell-off. Now you can actually use volume to help you out with this. Let's have a look what the volume says. Okay, you see that we have it less over there. So we've got this fair value gap, this fair value gap as well over there. Okay, now so this is the third one. Now let's look next at here. What's going to happen? Break structure. So fair value. Look how many fair value gap are leaving. 1, 2, 3. This one got filled up. So we've got ones here. Good. This one's a good one. Let's go. Okay. Here we go. Here we go. What do we have? We have this load taken out. We got this taken out. And we have a fair value gap being left behind. Fair value gap. So what is the candle that causes this breakout? So it's this one here. Okay. Now let's see slowly now. Okay. Interesting. You're not coming back at all. Come back. So we broke another one as well. Okay. So we're not coming back into this fair value gap. Okay. So we're creating momentum, which is very, very good. Oop, here we go. And we are coming back into the fair value gap. So come here, tap into this one here. As you can see, remember I was telling you earlier, we got nice fair value there, and we tap into this and we drop back down. Now we'll drop back down. We came here and we got some bullish pressure, hammer candle. So what I've done, I would have entered long here. My stop, I'm going to be in aggressive, put it there. I'm going to aim for 1 to 2 as well. So let's go for 1 to 0.5 and see what happens. Now this indeed got it. So this means that my stop need to be here. Okay, so my stops need to be here. Okay, now the problem with this one is 1 to 2 would be here. Okay, now this means that my pending order should have been here. This would have decreased my loss to here, and this will have put me to 1 to 2 risk reward ratio. Okay, so this would have been better. Okay, and we are currently here. Okay, so we are currently here. So this would have been better. Okay, now what we've learned from this, we've learned that even though if the market is going down, in a downtrend, we can still look for those confirmation. So since we're taking liquidity on the downside, we'll need to be looking up. Okay, now market has been trending massively on the downside, as you can clearly see, and then we're going to limit our risk to reward to 1 to 2. Okay, and enter at the order block. It's much better. Okay, much better. Now we are going to be using our RSI. Let's take a look. Okay, and you can see that we are getting a nice. So this is up. Okay, and you can see that even though we come back into this one, we're still getting a nice divergence, convergence actually here, and then we can take this even further over there. Okay, now for those of you who are trading on the 1 minute time frame, let's see what we got. Okay, now you see the 1 minute time frame, we have an even small fair value gap there. Okay, so in this case, you'll be like, wait a minute, I want the market to tap into this fair value gap. So entry will be here, and you're going to place a stop here, and then you're going to go for 1:2. Now you can easily see that you're going to get more here. You can see the fair value gap that we left behind. So we've got the displacement up and displacement down. So we're going to target this one here, or even this one here. So keep it there, 1 to 3 in this case. Now let's take a look at this one. Could we have refined this even further? Okay. Yes, as you can clearly see. So we've got a push here. We have the order. So now we got the push down here. So we've got a change, a nice pattern, and then as you can clearly see, we could have gone for, let's say, we've got fair value gaps, we've got fair value gap here, fair value gap here, okay, fair value gap here as well. Then you can actually stretch it a little bit further and see whether we can get this one here. Okay, or even if you just keep it like this, we'll be fine. You're gonna get an extra from this one. Now let's take a look at the other one. Okay, so here we go at this one here. Okay, again, so you can see that we have a fair value gap here. So we got this here, and then we have a nice fair value gap over here, and you're looking for market to tap into this fair value gap. So therefore, you're going to decrease this, maybe put here in the middle stops, and you can go increase your risk reward to 2.76 in this particular case. Okay, so this would have been a nice trade here. So 3 trades throughout the day. Okay, so boom 1, boom 1. Just keep it 1 to 2, and you have easily 1. So this is an ICT technique that we can use. Okay. Now you can try to use the same principle on a much higher time frame. Okay, for you to get the large swings if you want to do that. Okay, so you see the market come back here into this place. You need to know why market is going back to this place. Is it in discount, or is it in premium? Is it at equilibrium, and so on? Why is market going back to this place? So you see that market come back to this place because this point here is indeed 61%. It is in discount. So this is discount. Even this here is in discount. Okay, so tap into this one, and then we start going up. Okay. Right, again, so one market is in here. So from this low, we have break of structure to this high, come back into discounts. Now here we have a big displacement downwards, and then we go down into this discount, and then we go pushing up a little bit. Okay, so these are the things that we can do. But you can actually see that we've actually won 3 trades using ICT.